Hello, everyone, and welcome to TradeFinder Live. It's great to be back with you all during this trading day and during trading hours. First and foremost, we have to cover our disclosure disclaimer agreement. If you've attended any of our live webinars, you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. Feel free to take a screenshot of this now if you like, but that's the main point to take away. Other than that, we'll get right into it. Rob, you out there? Lots of exciting topics to get into this session. I know we had the holiday weekend and the market saw weaker home building sentiment. So to start the trading week out, it seems like it hasn't seemed to move the market. So interested to hear your thoughts on that and get right into it.
Sounds good. Hi, everybody. Welcome to this week's Trade Finder Live. Hope you had a great holiday weekend. As you know, the markets were closed yesterday. So today's the first trading day. And as Zach mentioned, we did have home builder sentiment, which has been pretty strong for quite some time, as you can imagine. But it ticked down a bit last month. And then this month, it was down the readings around 42, which is pretty low. They use the same kind of scale as they talk about with the PMIs, et cetera. 50 representing growth, above 50 on the PMIs. Anything below 50 is contraction. When you're talking about sentiment, it's a little bit different. So it's bullish or bearish. So a reading below 50 is kind of bearish sentiment. And with that, we can take a look at the XHB at some point and see how that might be affecting home builder sentiment. So, are the home building stocks. Should be able to see your screen now, or my screen now, and there's the S&P. And other than the home building stocks, it probably hasn't had any sort of effect on the market. We have a little bit of a bid back under the big tech stocks. Will Meta make it 21? 20 days in a row there. So lots of stuff to talk about as we get through this presentation. But as you can see, we're just kind of sitting right here around that 610 level on the S&P. And even though you might think, oh gosh, we're bumping our head against this resistance, we can't get above it, that's a negative. I actually view it as a positive because as you can see, we are just a little bit above the 10-day moving average. I've talked about this a lot in the past. If you're going to break a major point of resistance, break out of a triangle, break out of a strong moving average, whatever. You don't want to do that when you're already overbought or oversold if it's to the downside, because those breakout moves tend not to hold. So you want it to be set up to where there's good energy and momentum behind the move, and then it has a higher likelihood of holding. So in other words, even though we have the wave 5 here because we technically took out this wave 3 high back from December, we do have the opportunity to extend this wave 5 up to where the tap box is showing it around 630. And by the way, if you haven't gotten a copy of the software, go to hub.com and get yourself a copy of it. It's great software. You get live Elliott Wave, you get free Elliott Wave too, and the live is free as well. So it's a great piece of software. Most of you, I'm sure, have it already. But the key here is the tap box target around 630 is where we can go. But as you can see, with the separation still from the 10-day moving average, we've got a little bit of work to do to allow that to catch up. So I think if we just go sideways for another day or two, I talked about this in the U.S. market update on YouTube, that we didn't want to just take off. We needed a little bit of sideways movement here to start the week. And so far we're getting that. It's exactly what we're getting. So I think this is a very constructive session so far, even though it's not too significant from a price movement. But we just sit here for a couple days and then make a breakout attempt. That would be the ideal scenario to move up towards that 630 level. Let's go ahead and move straight to the bond market. I'm going to go to TLT immediately. That's the 20-year. And just as a reminder for those of you that might be newer joining us, if you've been here before, you've heard this a million times, but TLT is prices on the 20-year. Prices and yields move inversely in the bond market. So when you see the fact that prices are coming down, that means yields and rates are ticking up, and they have just a little bit. But you can see we've just been kind of bouncing around here after completing a really nice 5-wave pattern to the downside with a 50% wave 4 yielding 100% extension on the wave 5. Just textbook Elliott wave. And look, I mean, the dead center of the tap box here with the software. And another aspect of this software is it's programmed exactly to the Elliott wave algorithm as Ralph Nelson Elliott wrote it. Other software programs have some personal adaptations. This one does not. It's personal preference there. I've tried all the ones that I know to exist and think this is the best. I'm an Elliott wave fan, and I like this software, especially this new version here. But just kind of ticking around here, as long as we don't get too high in rates, I think we're fine. So just this trending sideways here, I do believe is constructive for the equities market, the bond market. So let's move to the TNX. This is the 10-year. Now this is yields or rates. So where the TLT shows you prices on the 20-year, TNX shows you yields or rates on the 10-year. And you can see that we've had this movement down. Once again, just very classic Elliott wave stuff for those of you that are newer. Look at this zigzag pattern. We had the A wave down, the B wave right at 38.2. That's going to give you a 61.8% extension. Normally, when we're going to go to a further extended C wave, we bounce up and test the previous fib level first. Gosh, we bounced all the way back up to 38.2 right there, and then came down to the 100%. When a zigzag finishes, usually you retrace the entire C wave, and that's what we did just a couple days ago. Just really constructive stuff in the bond market. The bond market has been squirrely for a year or two. We had the inverted yield curve for quite some time. We still haven't gone through a recession. I think we still need to keep that in the back of our mind. It's one of the rare things in the markets that's 100%. In other words, going back historically, every single recession that we've had has been preceded by an inverted yield curve, but it doesn't work the opposite way. Every inverted yield curve has not yielded a recession. So perhaps we don't have a recession. I'd still be surprised. I'm still holding in the back of my mind that for the length of time and the amount that we have been inverted in the yield curve over the past year or so, I just think we have to still proceed with caution. You trade what the markets give you, and we're in a bullish mode. So we continue to do that, but it's not a, load the boat, back up the truck, and whatever your favorite cliche is, going long. We just go with what's working. And at evotrader.com is the AI signals. And you have the opportunity to get those if you'd like as well by going to hub.com. You can add that on to the software. The Elliott wave is free, but the AI signals you pay a subscription for, but they're worth it if you go back and look at the signals. So let's move to the VIX. Now we take a look at the VIX. And you can see just not a whole lot going on here. I have this big trading range. You've all seen this numerous times. There just hasn't been much to talk about on the VIX lately. So we have this upper end of the trading range around 18. We have the lower end around 12 and a half. So call it 12 and a half to 17 and a half has been the range, other than a few outlying spikes to the upside that got up around 22 and a half, but immediately came back down. And we're at the midpoint, which means we could go either way in this trading range. We could tick up a little bit on the VIX on volatility, and that might mean a slight downward move, or we can head down. And if we are going to break above 610 and go to 630, as I just showed you on the SPY, it's likely that the VIX is going to move down towards this support level around 12 and a half. We'll have to see how it plays out, but that's what's likely to occur. Now let's move to some of the other U.S. markets. We'll move to the Dow. I like to look at the DIA for the Dow, and we're consolidating here. The only difference here is that we have not moved this wave 5 over. So we have a Still a wave five to the upside here on the DIA, but you can see the difference between the SPY. I'll bring that chart right back up. Look at the wave five at 125% extension. So we have a little bit of an extended wave five, and we have consolidation here. We can actually move this triangle over a bit. And that's another cool feature of the software is when you've looked at a chart in the past and you draw lines on it, you make your notes, whatever, it remembers it. And every time you bring that symbol back up, it remembers what you've written in the past. So you don't have to go through and do it again. So if you look at something and you make notes and this is what I think, whatever, you can come back or go back to it in the future. Back to the Future. There you go. Old movie reference for you, Zach. And take a look at what you've noted before to see if you were right. So you can write on your screen. You can use this text box feature here and write something if you want. You can see it allows you to write it, and then you hit the check mark to put it on, and it'll remember it for you. But we have this small, rather small, symmetrical triangle here right underneath the resistance, which on the DIA is at 450. So if we do break higher on the SPY, I would surmise that we would probably break higher on the DIA as well, and maybe that wave five moves over. It's just interesting to me that the DIA is a little more extended than the SPY. So I said I was going to bring this back up, and look, the extension here on the wave five and the SPY is only 51%. So that's where the action is. Things have changed dramatically from where we were at the end of the year, where at the end of the year, we were talking about how much money was moving into the Dow, and you can clearly see it in this trend channel here, moving in September, October, November, into December. Everything was about the Dow. We went to the upside, and then we had a correction here, and we haven't had quite the movement back to the upside that we have on the SPY, but pretty similar. And that's how it works in the markets. They normally move in a similar fashion, but the exact patterns are not always identical. Let's move into the Qs. And as long as the bond market is cooperating the way it is right now, I think we can keep a bid under the Qs. But the Qs need the bond market. And then we're going to go to the IWM in a minute, which needs the bond market even more. There's the symmetrical triangle there that I just showed you on the DIA has already broken out on the Qs. So they seem to be a little bit ahead of where we are on the Dow. So this is almost identical to where we are on the SPY. So the SPY and the Qs, extremely similar patterns, a little bit similar on the DIA, just not quite exactly the same. And then if we move to the IWM, which is the market that is the most rate sensitive market that we have. Small caps are extremely rate sensitive. I've talked about this in past recordings. You can go back and look at the U.S. market updates on YouTube, where I go through in more detail on why small caps are rate sensitive, smaller companies need to borrow money, etc. It plays into it. And we're just sitting here with the 10, 30, and 50-day, the primary moving averages that I like to put on the charts. The 10-day is the lime green line, the fuchsia colored line is the 30-day, and the royal blue line is the 50-day. They're all exactly at the same spot here in this range on the IWM between 220 and 230. So right now, if you like trading the small caps, you like trading the IWM or the Russell, the RUT, RUT, you need to be just patient right now, I think, is the key. Let it make a break of one of these two levels. If we break above 230, I think you go long the IWM, and we can see a move up here. That's going to need rates to come down just a bit. And with the economic data, we had the hot CPI last week. That bounced rates up a little bit. That kept the IWM in this range. So you can see this is the outlier of the markets where the pattern is not close to where we are on the SPY, Dow, or the Qs. So we watch the bond market specifically dealing with the IWM, but you want to watch the bond market for all equities So if we can break above 230, you go long the IWM. If we break down below 220, you go short the IWM. But right now we're just in the mid range. So again, caution, pause, let the market come to you. There's no reason to rush into any sort of a move on the IWM. Let it break out and move a directional breakout move, and then you can trade that. If we move into energy, we look at natural gas, which has given us, we talked about this last week. I talked about it in the US market update, and look at this move today in natural gas. We have another winter storm coming over the next few days. Maybe that's what's giving us this final little bid, but we finally made it to the tap box. So I've been joking about how the UNG has just been untradeable because the patterns have just been so squirrely, but they've settled down quite a bit. We had this small zigzag pattern here where we had a 38.2% B wave correction. That gave us the 61.8% extension right here in November of last year. And then we've moved up and we have this nice zigzag and LA wave, 5-wave pattern to the upside here. But now we're in the tap box. Now it makes a little bit more sense. I'm a little bit confused as to why the bid in UNG has come now. We're in February. So the markets usually look 6 to 9 months ahead. And that's looking past wintertime, which is normally peak natural gas usage. So you would have thought that this bid would have come sooner rather than where we are right now. But it hasn't played out that way. And the markets don't always give you what makes sense. And I learned this a long time ago. That the markets don't trade by where you think they should go. The markets trade on their own. They're going to do their own thing. You can choose to trade the way you think markets should go, or you can choose to trade what the markets are telling you. And they told us that we were likely moving to an upside. The key here was breaking above this wave 3, which we've done today. But is there still a trade left? Being up here on the high of the day at this moment, we're pretty separated from the 10-day moving average. You know the rule, no security in any time frame gets too far from the 10-day moving average. So we're a little overbought on the UNG based on today's movement, and we are in the tap box. So as far as trying to get in now, you would be buying in at an extended move. And this goes back to what I was talking about before on the SPY. You don't necessarily want to chase moves when they're extended. So if you caught this move to the upside, as we talked about just a few days ago last week, finally it looked like we had a tradable pattern on the UNG. But now, if you didn't get into that, be difficult to chase this. We could go higher. We could go all the way up towards 23 or so on the UNG within this tap box, which is the forecasted move time and price projection on the wave 5 in UNG. But gosh, you want it to go sideways for a day or two, maybe even tick down a bit and test this 20 level, which is where the wave 3 high was. And then maybe we have another entry. So if you're not in now, I don't think I would chase this upward move. I would wait and see if we back off just a little bit. And then oil, there was some news on the whole war front thing has kept oil back down. As you know, if you've been listening, when we had the breakout of this triangle, I did think we were going to break out. I was a little surprised that we broke up to 85. I shouldn't have been because the mouth of the triangle is how you forecast the move. So you measure from the low to the high, how far is that price wise? And then you go to the point of the triangle and then you apply the distance between the high and the low in the mouth. That's the wide part of the triangle. This is the point where it condenses. And then you look and we went right there. I just was surprised that we'd break above 80. We did. We followed the rules of the triangle breakout. And now I think we're back down here in this trading range. Now, even though we have just a little bit of a bid in USO today because of the war news, I still think, which I've been talking about for quite some time now, a trading range on oil, specifically the USO, between 70 and you can call it 67 and a half, maybe down to 65. Anything above 60 gives domestic production a bid. they feel like they can make money above $60 a share. And so Trump's drill, baby, drill. This gives the opportunity for domestic production to seek out new places, new areas to drill, etc. But my point has been when you look at OPEC, they want prices to stay elevated. They've done their geometric studies, et cetera. They know that they have a limited amount of oil left in the ground. They want to make as much money as they can. I've been stating that my viewpoint has been that if we create increased production in the U.S., OPEC would just cut production to meet it. And in the last week to 2 weeks, OPEC actually made that statement. Go ahead, U.S., drill, baby, drill. They actually used Trump's phrase and said, we're just going to cut our production to meet whatever increased production comes from the U.S. So I know Trump wants to bring oil prices down. He wants to bring energy prices down because that's beneficial to the consumer. I just don't think OPEC is going to play the game. And they're going to use their supply demand curve to offset additional supply that may come domestically from the U.S. So I still think that this trading range is where we're going to be on oil moving forward. You do have to respect, however, that this wave 4 is awfully close to the 61.8% level, the strongest of all fib levels, in my opinion. It is a well-formed 5-wave pattern. So perhaps Elliott Wave here is forecasting something that we don't know yet out of oil, and we could have this wave 5 that continues to the upside. And you can see the projected price here up just under 90 in the wave 5, call that 87.5, which would mean we would take out not only 80, but we would take out the wave 3 high around 85 for a new wave 5 high. I think that we need some sort of a black swan event, and we could easily get it to create that kind of a movement. Even with the news today, it's just a little bit of a tick up in oil. It hasn't been that significant. So I think it would be something, an outlier event to allow that wave 5 to continue. But we'll see. We'll see how that plays out. Now let's move to the metals. Gold back to the upside today. Holy cow, gold has had one heck of a bid. You can see this triangle here. We did have a strangle on this for our alert subscribers at ewotrader.com. We caught this breakout to the upside. We did get out perhaps a little too soon. It's easy to Monday morning quarterback when you look at the charts, but we had a really nice bullish trade. You can't go back and second guess trades or you'll drive yourself nuts from a psychological standpoint in the world of trading. But you can see with today's move, we're starting to get a little bit above that 10-day moving average. The wave 3, I did note this, is still colored green. What that means when you're looking at it, and you can change the colors, but whatever color you pick for when you have a confirmed finish on the wave, is one color, and then it's a different color if it's still the active wave. So the software is saying, hey, in the algorithm, the wave 3 may not be finished yet. We could even go higher on GLD. Once this turns purple, then we'll start looking for where is the wave 4 correction. But until that happens, we have to respect the fact that GLD could go higher. And then when we move to silver, it's like, what's going on with silver? It has moved to the upside, but it's got a long way to go to play catch up. And notice the pattern's different. Where we have a wave 3 to the upside in GLD, we have a still barely, but qualified 5-wave to the downside on SLV. And the reason I say barely is that wave 4 is just under the 78.6% fib level, which is the last area where you would have a qualified 5-wave pattern in the wave 4. So if we break above this price on the wave 4 on SLV, that would disqualify this pattern. I think that's likely. I think silver has lagged gold. Clearly, you can see that on the chart, so it's not just me saying I think that. It's clear on the charts. And the only question is, does silver play catch up to gold, or do they continue this separation? Right now, they have opposite five-wave patterns, they will come in line at some point, regardless of whether or not we have this wave 5 down in SLV and a wave 4 in GLD, both of those indicating downward moves, or does the SLV disqualify this pattern and then relabel to match what's going on in the GLD. In other words, this movement here, instead of being a wave 4 corrective move in a 5-wave downside pattern, could relabel and then this be a wave 3 to the upside, and then the two would match. We'll find that out over the next few trading days, at least over the next week or two at the latest. We'll know what's going to occur there. It's just interesting that they're a bit different. And I think that there's a interesting trade here on SLV as far as do we play catch up to GLD, take out this wave 2 high here that occurred back at the end of October on SLV. Interesting when you look at silver and see that we haven't taken out the October high, but we go back to GLD and we've blown away that high from October. Here's where the high was back in October, which matched the high on SLV. So you can see they were in tune together then, but now we've had this big move up in GLD. Gold has reasserted itself as big brother. They go back and forth, at least over the past few years. That's what's happened between GLD and SLV. Historically, gold has been the leader, silver has been the follower. Then we had a period of time when the Qs were really moving, the big Mag 7 movements, and SLV kind of took the reins and said, nope, now we're the leader. Little brother is taking over. Well, they've reversed. They've gone back to what normally happens, which is GLD or gold being the leader and silver following. So the question becomes, do we get this continued catch-up move in SLV? And if we do, I do think this pattern relabels. But until that occurs, you have to respect the fact that it's still a qualified pattern until it's not. And then we'll see how things play out from there. Let's move into Bitcoin. So if we move over and look at BTC, you can see it's trading below 100,000, but still doing a pretty nice job, in my opinion, of consolidating this big vertical move that happened here post-election. So when we had election night, having an administration that's coming in that's pro-crypto, we had this big move to the upside, and not just Bitcoin, but pretty much all things crypto moved. And you can say, well, gosh, we have gone up, we've gotten above 100,000, we keep coming back down. But here is the channel that I think is interesting in Bitcoin between just under 90,000 and 100,000. In fact, it's more like the 94,000 where we are here at the midpoint. You can see that that acted as resistance back for a brief time at the end of November, and then we broke above it, and it's been support ever since. Even the outlier day here that occurred in mid-January was just intraday, and we moved back here. I know Bitcoin trades 24/7, but it does have a calendar rollover effect, so that when you're looking at end-of-day charts, you can see bars that indicate end-of-day movement, even though it's still trading 24/7. So we have this triangle here. It looked like perhaps we're going to break out, and maybe we are. We have to be a little cautious on this downward move today. Is this a downside breakout on Bitcoin? There was a naysayer on the financial networks this morning saying there's some things to be concerned about with Bitcoin. I think most of the crypto world would be saying, I don't necessarily see that. If Trump is going to come through with his purchase of Bitcoin for the strategic reserve in the US, that would likely keep the bid underneath Bitcoin, which I think is what's been going on now. And there's a lot of people that are waiting for Trump to say when they're going to buy. I don't think they're going to tell us. Why would the administration tell us when they're going to buy Bitcoin? Because everybody would jump in ahead of time. And then if the government's going to buy it, they'd buy it at a higher price. So I think it's going to be an after event effect that the administration will come out and tell us after they've bought Bitcoin for the strategic reserve. Right now, they just said they've created a committee to do some research. I think that's going to be recommendations on how much and when to buy it. So we stay in this trading range for now. And at this point, it's a very small trading range between 94, 95,000 and 100,000. Even if we break the midpoint, we still have support down here where this wave 4 was around 87 and a half. So even if we broke down to this level, you wouldn't get concerned about Bitcoin unless we broke the wave 4. Now, if we break this wave 4 low, I don't like it when wave 4s are only one bar, but if we were to break it, if we were to break below this support level, then you can see based on the vertical nature of the move up post-election, there's no resistance on the way down. So you do want to hold this level. If you're long Bitcoin, you don't want to see this level breached here. You're okay all the way down to 87 and a half or so, but you don't want to see that level broken. Then we can go look at some of the other cryptos. Ethereum is one that a lot of people have been talking about. Zach's been talking about this as well. You probably heard him talking about Eric Trump's tweet on seems like a good time to buy Ethereum. Go ahead and buy it. You'll thank me later. A lot of people wondering, was that really an appropriate tweet to send out, considering his connection to the president? So far, it hasn't really created a bid under Ethereum. People have kind of just shaken that off. But do we get a turn and move back to the upside? The problem with Ethereum is the wave 3 down is still green, meaning that this is still the active wave on a wave 3 down, and it's probably going to stay that way unless we're able to break back above 3,000. And then we'll see if the LA wave pattern changes, if the 3 becomes confirmed, moves to a purple color, and then we're in the wave 4 bounce higher, or does the pattern even hold? All that stuff we'll have to wait and see. But if you want to be long Ethereum, I think you want to see it get back above 3,000, back above the 50-day moving average, once again, the royal blue line, and then you can be a little bit more constructive on Ethereum. So for now, it's just a wait and see there. And then we look at XRP. That's been a favorite with the meme crowd. It's also pulling back just a bit today, as you can see. But what a heck of a move we had in XRP post-election, where we were down at 50 cents and we ran all the way up to above $3. So again, you could say constructive backing and filling here, consolidation following that big move. If you're long these, you want to see these kind of moves continue, but it's not really how the market works. You get such a strong move like that, you need time to back and fill, and you don't want to see things get too vertical too fast, or they don't hold. But when we're going through this backing and filling, it's holding pretty well so far. Solana, you can see that something's going on there because we've broken to the downside here. That was a key move below this support level, and we'll see if that continues with follow through. If so, then we could be looking at Solana going even lower down here, all the way down to the support level. So it's a little bit of danger for Solana. I took out ADA Cardano in the past because more people were asking about Solana, but let's bring Cardano back because you ask about it. I do read the comments that you leave under the videos on the US market update on YouTube. So there we are. Really not a whole lot going on here with Cardano. It's holding in pretty well around the 75-cent level. Once again, a massive move from 25 cents up to $1.25 during the post-election rally, and going through and trying to consolidate that move. The key here on Cardano, if you're long here, you do want to see it hold this 75 level. You want to see it stay right here. If it does break this level, it needs to immediately turn and go back to the upside, which it has done in this break a week or so ago. But we're back down, getting dangerously close to testing that. So that covers most of the stuff on the crypto side of things. Now let's take a look at a few international markets. We can look at the EWA, which is what I like to use for Australia. We do a couple different symbols on our insiders meeting on Thursday nights for our alert subscribers at ewotrader.com. But you can see this move up here. We did break above the 61.8% level. So we've got an extended wave four. Does that relabel? You're seeing this move here. The movement in the Aussie markets tend to go with resources. So we've had a move up in gold and silver. And as long as that occurs, probably going to keep a bid under the Aussie market. But if we do lose gold and silver, if silver continues down in that wave five and gold breaks down into the wave four, we could see a bit of a movement to the downside in the Aussie market. So just keep an eye on the resources if you want to be trading the Aussie market. And then we need to look at the EWC. So if we look at EWC Canada for our friends up north, it's just mind-boggling here that with all the rhetoric that's going on, Trump's comments about making them the 60 or the 51st state, all that kind of stuff, you would have thought would have been more of a detriment to the Canadian market, tariff talk, etc. But it's held in there pretty well. We're still above the 10-day moving average here on EWC. So as long as we stay above the 10-day moving average, you got to stay long. It's counterintuitive with all the news that's been coming out about Canada, but that's what I was talking about at the very beginning of this presentation is you have to trade what the charts are giving you, not what you think is going to happen, because it would be very easy to be bearish on the Canadian market based on all the commentary from our administration on Canada. But they're shaking it off and they're moving as they have been for quite some time, kind of almost dead lockstep with the Aussie market. Canada is pretty resource rich as well. So they've been moving along with resources. And so that's what's occurring here in the Canadian market. Then they were even talking about this before the market opened today on the financial networks. Germany, just what's going on there is blowing people's minds, mine included. How we're moving up like this, I have no idea. It just goes to the fact that the ECB, the European Central Bank, has been cutting rates for quite some time. They're well ahead of us here in the US on cutting rates. And with all the negative stuff, the numbers were not good economically that came out a week or so ago from the German market. But yet we've still continued to move higher. And look how extended we are from the 10-day moving average. It looks like we're trying to form a doji today. There's no way you can chase, or at least I couldn't chase a vertical move like this. I don't like it when things go vertically. I don't like it when they get too far from the 10-day moving average. I think we're going to see some pretty good backing and filling here on the EWG. But why this occurred is kind of mind-boggling on its own with the economic data. They've got all kinds of political strife going on in Germany, if you've been watching the news, and the concern about tariffs over in Europe. But none of that has stopped this move in the EWG. It's one of those things where you talk about markets climb a wall of worry. You may have heard that phrase before. It's one of those cliche phrases that have been around the market for a while. There's no better example of that than what we're seeing in the EWG because everything seems so bearish. And then yet we're moving higher there. I did want to show you the INDA because that one has been so spot on from Elliott Wave for the past couple of years, really. We had a number of times when we had the wave five moving to the upside, and then it would relabel to a three, and we make a new wave five, that would relabel to a three, and we just kept zigging, zagging to the upside. Well, now we've had a zigzag to the downside, and we've had the opposite occur. We had a wave five right in this area to the downside, but that relabeled to a wave three. So where this was occurring a lot on the way up over the past couple of years, over the past several months, it's been this zigzag pattern and wave five to the downside, and that five relabeling to a three. You can see I drew a line in here where the five was. And now we're down at the 100% level of the zigzag. I mentioned this over the last week or two. We had this little bit of a bounce here. Usually these fib levels get touched. And I know you could look at this, even if we had held this area here towards the end of January, right around 50, which didn't quite make it to the 100% level, you could say, well, gosh, that was pretty darn close. That's why I like to point out that a high percentage of the time, these fib levels actually get touched. And that's where we are now on the INDA. And I call this the battle of the investment managers on India right now, where some are saying it's time to leave, others are saying this is the place to be. And so there's this battle playing out, and that's what's been going on for the past month or so, even though we had a little bit of a tick to the downside. Let's see if this 100% extension on the zigzag pattern holds here, and maybe this wave three turns purple and we start to look for a wave four bounce. But as long as that three is green, it's the active wave, it would be impressive to see the INDA break below this 100% extension. But it's possible if you were super aggressive and had some really speculative money, it might be a time to take a flyer on the INDA. But if you're more conservative, and I usually try to give aggressive and conservative views because we're all different from our own risk tolerances, I would want to see to be a little bit more conservative going along the market in India. Whether you're trading the INDA or the Nifty, I would want to see it break back above this 50-day moving average. So it would be a little bit of a movement higher here, but a real aggressive move would be to say, I think this 100% extension on the zigzag is going to hold, and we're going to start that wave four bounce here soon. The key there from a risk management standpoint is that the risk is pretty small. If you were to take that viewpoint and we break down below this 100% extension with a follow through day, you get out. So a small amount of risk with a pretty good potential for upside there if you wanted to go long. But just understand that's a speculative move at this point in time because it's right in the face of this wave three still being the active wave to the downside. And then let's look at FXI. They've been talking about Alibaba, etc. And we had this upward breakout move. We had this triangle on strangle on the triangle on in the volatility portfolio at ewotrader.com, and the breakout move was to the upside. And I think that's been because Trump's been a little bit kinder on China with the tariffs. From what he was talking about, the heavy rhetoric. There have been some additional tariffs enacted, but less than what was feared, and that's put a bid underneath the FXI. We've already gotten out of that one as well, but you can see the upward move still continues. But again, look at where we are here, where we're a little extended on the FXI even. So maybe just a little bit of backing and filling right here around this $35 level plays out pretty well on the FXI. All right, let's get to looking at our case study consideration. Boy, we really had a good one last week on TM US. Hopefully you followed along with that. I know some of you did because you made comments about it. That one moved really quickly to the upside. So that was a great short-term move. This was courtesy of those AI signals that I was telling you about earlier from the software at hub.com. And that was a great short-term trade. We look for case study considerations here. And we had the Apple bounce that occurred. So the past few have been really, really good on the case study considerations that we've looked at. So what are we going to look at this week? What's the case study consideration going to be for this week? And I think, and this is not going to be well received, I don't think, but if we take a look at Palantir, I think that Palantir coming back down towards 110, back down towards the 10-day moving average makes sense here. It's just had a big rocket ship to the upside, big gap, big vertical move. I think we're a little overbought here on Palantir, and maybe we need to do a little bit of a quick move to the downside. So we'll have Zach come in here in a few minutes and show you how to place that. But we're going to say, um, don't get mad at me and don't say I'm crazy, all this. Maybe I am. Maybe I'll be wrong. I'm wrong a lot. But when you look at this, it just looks like a pretty good trade back down towards that 110 level. It might not do that. It might just consolidate around here. But there's also the potential that we come back down to this big round number around 100. Now, I'm not saying that I think we're going to come down and fill this gap. I'm not saying that at all. I'm just saying that Palantir is overvalued, it's overbought, and a little bit of a move back down, some backing and filling is warranted here. It's just being prudent on the fact that nothing goes vertically forever. I'm anxious to hear what the comments may be along those lines. But with that, Zach, let's try to get in a few questions here, and then you can come in and show them how to post an idea like this using the social media aspect of the platform, which I think is it's amazing enough with all of the technical analysis, but when you add in the social aspect, it's just a really good piece of software. So, Zach, now go ahead and take a few questions here if we have them now.
Sounds great. Yeah, Lisa agrees with you that it's crazy overpriced, and I agree with you on the software bit. I am excited to show everyone how to post that case study consideration and trade idea here in just a bit. We'll get right into the questions with the time remaining. Will would like your thoughts and analysis on INDY.
INDY.
Correct.
Well, that's going back to another way of trading India. When I hear INDY, I go immediately to the Indianapolis 500, Indy and
Yeah,
Formula One. It's been something that I've followed since I was a child, IndyCar racing. But it's very similar to what's going on with the INDA. And they're almost in lockstep here. You can see the only difference being the INDA has a wave 3 to the downside, where this INDY has a wave 5. So it's saying we're closer to being finished than not. Where we had that wave 3 still being active on the INDA. Perhaps we stop here on the INDY and then start to create the bounce. We could start as with the wave 5 not extending beyond 100%, moving back to the wave 4, the previous wave 4 target. That could occur. And then we'll have to see if the INDA matches that. But I would say that the INDY is saying that perhaps we're done going down on the near term, and at least some sort of a short-term bounce is warranted in the market in India. So normally I'm looking at the INDA or the Nifty, so that was interesting to look at the INDY instead, which limits it to 50 stocks, as you can see.
agreed. And I think you hit the question spot on as well. Had a follow-up question on the target price for the wave 5 for INDA. So perhaps that was a combo question there. So well done. We'll go to a question from Mr. Pickle on Meta.
Yeah, and is it going to break the streak? That's the question today. We 20 days in a row, kind of tying a record. Going back to 2020 was the last time we had any equity that was up 20 straight days. You can see what's going on today. It doesn't look like we're going to, unless something dramatic happens between now and the close, that we're going to make it 21 days. But nothing goes up forever. It was a pretty solid move here. It wasn't, it was a little above 45 degrees, but it wasn't as vertical as some of the other charts that I've talked about that concern me. It's more vertical than 45 degrees, but not that that much so, but um, you're not going to go up every single day. So 20 days in a row, heck of a run. They're doing everything right. The commentary is right. They've gotten involved with the administration, a la Elon Musk and what's going on with Tesla. So you can see that support is down here at 600. I don't think we come back down that far, but a little bit of backing and filling here, some sideways movement is warranted. It just seems to me, it feels like they want to push Meta to $1,000. That's There's no technical stuff showing that. That's just purely speculation on my part, and take it for that and then whatever it's worth, which may not be much, but it's just an opinion. So I do think that you're, at least for now, in a buy the dip mentality in Meta. So if you missed part of this move, let's see how far we come back down in this backing and filling with the down day that we have today in Meta, and then see if we don't turn and go back higher. But I do think that when you start to get this high, you could argue that getting above 800 gives you a little more of a chance of that move to 1,000. I think the statistics say if you go to 850, there's a very high likelihood that you're going to go to 1,000. We didn't even quite make it to 750, so that's why I'm saying this is pure speculation on my part. But it just feels like that's where the push is going to be over time. Not going to happen in a week or so, but over time. So until that changes, I do think you're in a buy the dip mode on Meta. There's that move back to the 10-day moving average too. So we've accomplished that part. And we'll just see if there's another day or two. The only negative here is that the 10-day moving average did separate from the 50 a little bit. And that's kind of in the same realm of no security. Any time frame gets too far from the 10-day moving average. When you get too much separation here between the 10 and the 50, you tend to go sideways to slightly down for a bit and allow those two to come closer together. So that's kind of what was going on here. Even though it wasn't, I felt like it with 20 days in a row, like it was super vertical. It really wasn't quite that vertical, but we should rest a little bit here on Meta and then perhaps continue back to the upside. So, and unless something dramatic happens to the downside, I do think it's buy the dip on Meta.
Interesting thoughts there. We have a question here from Maria. I know you covered GLD, but Maria would like your thoughts on GDX. DMIs don't look great, but ADX is okay.
GDX.
Yes, sir.
Yeah, for the miners, they're trying to play catch up to gold. And very similar to what I talked about with SLV, as you mentioned, Zach. And we have an alert on GDX here, an adjustment as it looks to play catch up. Just the point here that we're looking for is a test of the October highs. And so far, it seems to be playing out. Wasn't a very good day on Friday. But bouncing back a little bit today, gold continuing to move to the upside. Now, the GDX is the miners, so it's not tied directly to the actual metal itself or gold. But if gold's going higher, unless the individual companies are very poorly managed, you would think that the miners would follow suit and go up. So we're looking for a little bit of a catch-up move there in GDX as well. It's done that over the last couple of weeks, as you can see, and as long as we hold above that 10-day moving average, I think we have a pretty good chance of going up and testing this recent high, going back to October. That's what we're looking for, is a move back to that October high.
Thanks, Rob. Ringo1 would like your thoughts on EDBL.
EDBL. Okay. That's not one that I look at a lot. Edible Garden. I'm guessing this is some sort of a food stock. I really don't know. But it's having a pretty good day today, as you can see, but it didn't hold the high, which would be a little concerning. So this is when you're getting into these low dollar, high risk stocks. They're very volatile. If you can get a move right, like catching a spike like this over here, You can do really well, but what goes vertically up comes right back down. And we got above 30 cents here earlier. Now we're trading down below 25. We're at 23.68 right now. And there's no Elliott wave pattern here. So it's just following the short-term technicals. This is just flipping a coin on where it's going to go. I don't know anything about the company. I don't know any background of it. It's not a company that I've traded. If we widen out the chart, you can see that it's been much higher than that in the past. I mean, it was that spike was short-lived, but it traded around $30, we can call it, and then it broke to the downside a bit, and now it's in danger of being delisted. I would imagine that there's a lot of chatter about that. And unless something can happen to get it back above $1 in the not too distant future, there's a pretty good chance this moves to the pink sheets, which is where the inexpensive below $1 stocks are. I would have to watch that. You would have liked to have seen that break above 30 cents, hold. There is some resistance there. And if we could break above that and hold it, when you look at how fast this movement was down from $1, I mean, it just fell off a cliff here. So again, there's no resistance in the way. So it looked like you're off and running here in December, but it couldn't hold it. It has held this little bit of support area just under 20 cents, around 15 cents. So highly speculative, high risk stuff there. And you would want to watch and see if we can close above 30 cents, and then maybe you can create something from there. But I'd have to do a little bit more research behind that company there to see what the likelihood is of that. But at this point in time, it's in danger of being delisted.
Yeah, that one was new to me as well. It looks like it's an organic farming company there, so it'd be interesting to
Well, I
run some
like
more
that space. I
analysis.
mean, yeah, I like that space. Good quality food. We have the new, health czar in RFK Jr., who's very big on wanting to get rid of processed foods. So perhaps that's having a play here. Maybe that's what caused this spike back up here. Again, I don't know. I'm just speculating on his nomination to be the health czar. HHS. Head, and perhaps that could put it on a run. Uh, the risk is the least path of resistance, I should say, is to the upside, not the downside. So if you wanted to be super aggressive, once again, speculative money. It's funny how every one of these events, every one of these webinars, Zach, seems to have a theme in it. And the theme today has been what to do if you have some speculative money, higher risk dollars that you're looking to trade. That's something that you could put in play here on a stock like this.
Yep, a speculative session indeed, and that was an interesting point on RFK's confirmation. So maybe one to keep on the watch list there. So
Absolutely.
I see we are a minute after time, so let's look at INTC for Lisa. Things are getting interesting there, and then we'll head over to the platform to post the idea.
Yeah, we're still in the talks on Intel on buyout. They talked about Broadcom buying out. Now they're talking about splitting Intel and Broadcom taking half of it. I forget who the other company is, top of my head at the moment, taking the other half. But one thing that I think is pretty good consensus is that for Intel to unlock value, they need to split the company. And if you're wondering, what are we talking about? It's the manufacturing side of things. You've heard Elon talk about how difficult manufacturing is with Tesla, that it's a nightmare. And that's what's weighing down Intel is the manufacturing side. So there's been talks about split off the manufacturing from the chips, et cetera, get the manufacturing out on its own, and you could unlock some value. And then all the talks about Broadcom potentially buying them has kept a bid underneath that. But we are overbought now. You can see where we're trading right now. Big update today because of that speculation, as I mentioned, of the not only Intel being split, but two different companies buying two different pieces of a TSMC. Thanks, Zach. Is the other company that could join Broadcom in buying Intel. And this is what happens when you start to get speculation like that. Um, the shorts have to cover, and then you get these vertical moves. But no way to chase this move at this point in time. If you caught it, great. I would be interested in taking some gains if I caught this move because it's too vertical. And then we have the potential to get back down towards the 10-day moving average, maybe as buyout talks settle down. But then the risk, you don't want to short it either, even though it's so far from the 10-day moving average. Normally you say, well, that would be a good one of those 1 to 3 days shorts, which is one of the things we talk about when we get these vertical moves from the 10-day moving average. But at any point in time, the buyout, pardon me, could be announced if you put any belief into those rumors. And who knows what the price is going to be. The stock will peg to the price if a buyout is actually indeed announced. So a lot of risk around trading Intel right now. So as I said, if you got in down there around support, we talked about how Intel could bounce off the support level. Certainly wasn't expecting anything like this. It was just support and we could move back up. I thought we might move back to 22 and a half because that's where resistance was. And we just blew right through that, as you can see. So well above where I thought we could go, bouncing off this support level. So that's all the things you have to consider with Intel going long or short, risk on both sides of it. So danger, danger, Will Robinson there.
Very well. That's insightful information there. Let's head over to the platform now. I see we are a few minutes after time, so I'll try and be speedy in my process here. So I'll take over the screen share. We see now we're at a menu view, a jumping off point of the platform. We're going to go right up here to this light bulb to the ideas to post a new idea where you can see all of the existing ideas from our ever-growing community. Rob, is this going to be an official idea or are we going with a post for this one?
Just gonna do a post on this one.
Okay.
Just yeah, there's no technical rules that are being followed here. It's just years of observation on when a stock gets overvalued. So nothing.
Speculative, you might say, huh?
Yeah, again, yeah, speculative downside move here with all the speculative upsides that we've had. So we got to balance it out a bit.
Fair enough. All right. And so as everyone can see, I'm going to go ahead and post this post. So we'll come back and make this pretty here very shortly after this session concludes, but it is available there now. So whether you agree or disagree, we'd love to hear your thoughts, opposing opinions, what makes markets. And if everyone agreed, there'd be no trades to take advantage of in this market. So with that, Rob, I'll pass back over to you to add final thoughts. And thank you all for taking time out of your day. It's always great to interact.
Sounds good. And thanks for showing them the platform. And you can see how many people I get messages every time somebody joins on the platform, especially during the TradeFinder page. Take advantage of it. You know how many Reddit users are and Wall Street Bets and all those. Now you have a place for social media right and connected with a great piece of technical software. So you have everything. It's all in one. If you other people think about your ideas and understand that you're never going to have something that the whole consensus views it same way you do. In fact, if you do, you're like, oh, I'm probably wrong because it takes buyers and sellers, it takes longs and shorts to make markets. People have to view things the opposite way. So it's always good to post an idea, see what other people think, and then see how it plays out. It's just a great community of trading ideas, and you can register your own thoughts on there. I've been really amazed in this world of how respectful people are. If somebody disagrees, they don't say negative things. They don't call you out as being wrong, etc. Just disagreements, and that's what we need. Is we need respective disagreements. And that's the great thing about the social media aspect of the Hub software. So with that, again, as I mentioned in the beginning, hope you had a great holiday weekend. We'll see how the rest of this week plays out. We talked about the S&P. We'll see if we can just generate a little more sideways movement here. You can see that we've sold off a little bit since we started the show. But as I said, going a little sideways here underneath this resistance area is actually constructive for the markets without some sort of a significant break lower. So thanks for your attention. Appreciate you taking out part of your trading day to be with us. So be found informative and look forward to talking again